Alrighty, folks, I have heard about stock chart experts talking about a 30 to 60% crash in the stock market. I, of course, shared that with the one and only and our great chartist, Mr. Dan Bird. And I said, Dan, is this stuff possible? Do you see anything in the chart that says the bottom is going to fall out and we're going to go from S&P 5,000 to S&P 2,000? Alrighty, folks, this is how to get spicy.
And
Mr.
what did
Dan
I
Bird.
say? What did I say when you asked me that?
You basically called me an idiot for sharing that with you.
Well, I said something else too. I said that's just clickbait,
Yeah, exactly.
which is what it is.
Yeah. Well, let's see what you see in the charts.
All right. So when you sent me that, and I appreciate that you sent it to me early in the week,
Yep.
so I had a chance to do some research,
Mhm.
and that's what I'm going to show, some of the research that I've done. So share my screen. This is my website. If anyone's interested, I put a newsletter out every week. Breakpointtrading.net. Just go there, click on this button, or register your email if you want to be reminded that it's there. And there's a lot of good stuff just right on the main page. Just to give you an update, I just added this ticker symbol bar. It's got the Magnificent Seven, it's got Bitcoin, Ethereum, some of the indexes, just so you can see during the day, and that updates live during the day. So that's pretty cool. All right, so let me see here. Let's go to my prepared remarks. And I'm going to turn on my laser pointer because I had people say, well, can't see where you're pointing. Okay. All right, so in doing my research, I came across this. Are you ready for the biggest stock market crash in history? And they used a chart, scary parallel. That's a chart from 1928 to 29. Okay. Which, as we know, led up to the Great Depression.
It did.
And there's the Dow, current period.
Mm-hmm.
All right. Pretty similar, isn't it?
Pretty similar. Pretty scary.
Wouldn't that scare people?
Yes.
Wouldn't you click on this site if you saw this?
Absolutely.
It says what you're looking at is exactly why you should be rethinking your investment strategy, especially if you're a stock market investor. This might be very similar to what everyone's reading, what you might have read. Mm-hmm. Over the last year, the stock market has been practically reliving shot for shot the growth pattern that preceded one of the most tragic occurrences in our short history, the Great Depression. And while the simple graph has been gaining traction across the country, what's probably even more disturbing are the words of the analyst who discovered the pattern. Now, when do you think this article was written? Last week?
Well, it was certainly republished last week. That's a good question. Looking at the numbers on the left side, it's not a recent article.
Right.
But no, I would not have picked that up.
2014.
Oh my goodness. That's so that was written a decade ago.
Yeah, 10 years ago. If you had seen this and read the article, clicked on their link, and got scared out of your positions, you would have missed out on the next 6-year run up until COVID. Mm-hmm. And it actually, you would have had to go through the 2018 mini decline. But we are way higher than this right now.
Oh, yeah.
We're at 39,000 actually. So on the left, you can see this is the Dow. I should have hidden that actually. So that was too much of a clue.
That was a gift. That was a clue. Yeah. See.
Right. We're at 39,000. So if you had listened to this clickbait, mm-hmm, you would have missed out on a 20,000 point move.
A double. You missed a double. More than a double.
More than a double. That's exactly right. That's why you shouldn't be listening to this clickbait. So let's look at some of the history. Here's the top 10 worst stock market crashes in history. Only one of them is more than 60%.
Yeah.
2 of them are 50%. Mm-hmm. And 3 of them are 40%ers. They're all pretty significant declines.
Yeah.
Right? So those are the top 10 biggest declines in history. There's what they look like on a long-term. This goes all the way back to 1870, by the way.
Wow.
And two reasons I like this is, number one, it kind of shows you what was going on during these periods. But the other thing that should jump out at people is, if you remember my secular bull and bear market thesis, and I'll show that at the end. So it's so important. It's on my website on the front page, available to anybody. You don't have to pay for it. It's right on the front page. Look at, this is a secular bear right here, 1969 to 81. And then look at how much of a run there was. Even the Black Monday period was inside of a secular bull market. Secular bulls last about 18 to 20 years. Secular bears last about 12. So here's our last secular bear. This is the dot-com crash right there. And here's the financial crisis right there. All right, that's a 12-year secular bear. This is a 12-year secular bear. This one, the Great Depression, was actually longer than that because it was so severe. But you can see what happens when we come out of those secular bears and secular bull gets started. It just climbs higher very rapidly. And then all the way back here is, before 1900. We are in a secular bull market right now. 18 to 20 years. Anyone that is saying the market is going to crash and go back to 2000, you are going to miss out on 4 to 5 years more left in the secular bull. Now, will it crash at the end of the secular bull? Perhaps it might, but it's not ready to do that right now. We've got a long way to go still. I'll give you some more ammunition. I love the way they did this one.
Oh, wow. Yeah.
These are all the major quote unquote crashes. All right. So first, I want to direct your attention to the percent drops, because this is what those crash bros use. Here's an 86% drop. Here's a 48% drop, 49, 57, 29 right here for Black Monday. COVID, 34%. But that's a 34% drop over the whole period.
Right.
That's not a one-day drop.
It's not a moment. Yeah.
It's not a moment in time.
Yeah.
That's over the whole period. I mean, if you do nothing other than tune into this station every Sunday, you're going to be out somewhere back here.
Right.
You're never going to have a 34, 29, 57% drop. The only way you can get that is if you stay in through the whole thing. And if you stay in through the whole thing, you might as well stay in for the recovery as well.
Yeah.
Right. So if your time horizon is forever, like Warren Buffett, who cares? The market goes higher. I just showed it right here.
Yep.
The market goes higher. So will there be a 30% drop? There probably will be. It won't be a one-day drop. So let's look at some of the one-day drops. These are the top 10 largest daily percentage losses. 87, 22% loss in one day.
Yeah.
29, of course. Here's 2008.
Well, here's, I mean, you know this, but for the audience, we can never have a drop as big as 1, 2, or 3 in a single day again. The market shuts down at 10%. It's called circuit breakers that were instituted after 87.
That's right. Of course, the problem with circuit breakers is you can't get out either.
Yeah, it's true. No, the market's shut. Yes.
Right. The market could open up again once everything calms down and continue to keep dropping.
Yeah, they're one day. Yep.
So things like the 87 crash and even the COVID crash, which actually isn't even on here.
It didn't even make the cut. Yeah.
Those things happen so quickly that it's hard to see them coming, but you actually can see them coming. So those are the one-day crashes. These are the one-day crashes in the 21st century. So this is back to 2000. So here's the 2008 one that we just looked at, 7.87. Here's COVID, 9.99 on March 12th. So this one does have COVID in it. So 10%, there's a circuit breaker right there.
Yep.
So that was the maximum crash. So anyone that says there's going to be a crash of 20%, anyone that says we're going down to 2000, take them off of your list, delete them out of your,
Block them, block them.
block them, delete them out of your internet. Go read them for a humor, for the humorous value that they might have, but don't listen to it. You'll lose more money listening to them than you'll save. So I'm going to go through this again. I've done this before here, but some folks might not have seen it. Can technical analysis have shown you where to get out before the last big downturns? Here's the dot-com crash, right? So this is the vector vest confirmed down, happened right here. And I use a combination of my own chart and vector vest for identifying these things. So there's the warning sign right here. Vector vest down was another warning. This is where the key moving averages cross. So in this case, it's an 8-day, 50-day, 21 and a 50-day. They all cross right here. And then there is a support line, which I taught in my session last Monday. There's a support line right there. That's kind of your last chance to get out before the dot-com crash. So what happened after that crash? So that's where I would have said, definitely got to get out here. I probably would have said, in fact, I would have been out probably up here.
Right.
When it crosses over the 50, when it crosses below the 200, which is this gray line, definitely
gotta go. Definitely gotta go.
Right.
Got it.
So what happened after that? There's what happened. This is where I said to get out right here.
Yeah. So let me just do the math real quick. So the last place you said get out was like 1410, maybe.
Probably 14. Yeah, 1425.
So let's say if you got in at the peak of 1525, so you would have suffered a 8% drop.
Yeah, if you had bought in at the top, yes.
And you got out at the last minute, you would have been down 8%.
Right.
Correct. Okay. That's fine.
And there's the bottom. So this is the last chance to get out, is this support line right here.
Yeah, so you would have avoided 60%. Yeah.
That's right.
Okay.
All right. So there's the dot-com. Here's the financial crisis. Here are the warning signs. So there's the first warning sign, but the market is still up there. It hasn't really started going down yet, but that's a warning sign. Here's where Vector Vest says to get out in November of 2007. Right. Now it starts going down here, and this is what I taught last Monday in that class. Once it starts to go down, now you can draw a trend line. So in order to feel comfortable it's not going down, you have to get back above that trend line. So it came down, the moving averages crossed right there, went below this support line here, came back up to this trend line and couldn't get above it. Went back down and couldn't get above this support, which is now resistance. So right there is your last ditch, last effort to get out. You should not be holding this any longer right there. Okay. So what happened? There's the get out point right there. You would have avoided all of this. Okay. And this is what I taught people last Monday. Here's the COVID crash, which is a lot harder because COVID was so fast. Right. Right. But in this case, there's a bearish divergence. Recognize that? Yep. I'm talking about that bearish divergence right there. So there's the big warning sign. Warning sign when the momentum crosses right there. We're still at the top. There's still really no reason other than in the beginning of February, about the middle of February, people started talking about this virus that's coming and they might have to stop letting people in from China. I remember. Right? Yep. That happened right here. The market hadn't started going down yet. That's when I got out, when I started hearing about the virus. And the reason I did that is because I am such a student of history. I read the book, The Great Pandemic, which talked about the 1918.
1918, yeah. Yep.
And I knew that we were due for another one. I knew that on average it's about 70 to 80 years, and we were already at 100 years. So I knew there was a pandemic that was due. So when I started hearing that, I got out right there. Again, history is really important. Everyone should read their history.
Yep.
All right, so that's the get out point. And of course, this went down really, really fast right there. I mean, your last chance was this support line right there.
Mm-hmm.
And I don't think I even need to go to the next one because it shows it all on one screen right there.
It does. Yeah.
But there's the bottom 2020.
Yeah.
And that's what we've done since then.
Yeah.
Since that crash.
So the
Now,
big
wait,
question
one more.
oh,
Hold on.
one more.
2022. This was a bear market. This was inside of a secular bull. This was a cyclical bear inside of a secular bull.
Okay.
Right now, in this case, this is pretty recent. So I was actually talking about this on this channel.
Yeah.
And I talked about the head and shoulders pattern.
I remember.
I talked about in 21, which is when you and I first started talking, the market was hitting all-time highs right here in 21. But all of the indicators, and even beyond this, the growth versus value and discretionary versus staples, I said they are all declining. Wall Street is rotating out of growth and into value. They are preparing for a market decline. And I said that on one of our very first talks in the end of 21. I said 22 is going to be a very rough year.
Yep.
But if you just look at the charts, you've got a potential head and shoulder, and it didn't complete till over here. But you have a support line that's drawn right across here. And I taught how to do this last Monday. So when it went down, it came back up, and I couldn't really get much above that support line, and it created that right shoulder. Then that's your last chance to get out, right at that 200-day moving average.
Got it.
But the warning signs were actually back here, even further back. And then this is what happened in 22.
Yep.
So taking all of that into consideration, and then I went through this, the January effect, and right now, because we were in the second quartile, there have been 0 times in 75 years, 0, that the market has gone down more than 20%. In 75 years, there has been 0 times the market has gone down more than 20%.
Okay.
I don't need to repeat that again, do I?
No, you got it.
Hopefully. All right. So one very last thing, and then you can ask the questions.
Sure.
Back here on the portfolios page, at the very bottom, I have the NASDAQ, the S&P, and I have the total market index down here that shows the daily chart, which is basically what we were just looking at. All of those charts from all of those periods were all daily charts, right? So if we look at the same thing, if we look at the same kind of view of all of those times that I showed you before where you could have got out a lot earlier, this is what it looks like right now.
Okay.
Do you see any warning signs?
No.
No. But I will submit that the market has gone up quite a bit, and it absolutely could roll over and start to decline. But you will know if you just do nothing other than tune into this channel every Sunday.
Yeah. Once a week. Yeah.
And listen to our conversation. If you do nothing but that, you will know well in advance that we're starting to get there.
Yeah. So when I look at the, can you go back to that one?
Which
go ahead. Finish your thought.
Right here. This is what I'm saying. You're not going to get a 34% drop without getting.
Yeah, you'll be out way early. Exactly.
You're going to get out way early before you ever experience 34 or 29 or 57% drops.
Yeah.
In fact, I'll go one step further. If you follow me, you will actually make money on those 34% drops.
Yeah, because you'll go opposite. Yeah, exactly.
Yeah. You'll take the short positions, you'll get out right here. You won't lose money, but you'll actually make money as it goes down. So don't listen to all that clickbait that's out there.
Yeah. So when you look at the one thing I wanted to ask you kind of as a closing thought on this is when you look at just the chart, nothing else. We're not looking at an election year. We're not looking at anything else, just the chart.
Right.
Do you see any trap doors or what's like a minimum like resistance? Is that the red line, like the 50-day? That's like we could get there. Like is it the 200-day? Where are we in all of this?
Yeah, that's actually a really good question. There's a lot of ways to talk about that. The Keltner channels, I think, is a good way to look at it.
Okay, let's do that.
This shows you extremes, right? And this shows you what this basically shows you the personality of the market. Again, this is on my website, so you can.
So let me try to translate this. So
Sure.
as a novice, so when I look at this, and again, you've been talking to me now for a couple of years on this, it's very reasonable to think this could get back to trend, which is that center black line.
Correct. That would actually be healthy.
Okay, that'd be healthy. So I don't know what that is. That's like, I don't know, 3% drop or something. Not crazy.
Well, this is the VTI. That's about 250.
Yeah.
And we're at 264.
Yeah, so whatever.
No,
So
we're at 254.
yeah, so 2%.
Yeah, 2%.
Let's call it that. So okay. It's also reasonable to think, hey, it could go beyond that, right? Because it obviously, overcorrects the other way. So let's just say, 2%, you go 2% the other way. It's not unreasonable. A 4% move in the stock market in a short week or two is not unheard of.
Right.
Okay. If we went to the extreme, we're talking 242. If I look at the third.
That's right. The extreme on the bottom sign is 242. Now, as it moves down, that will also move down too.
All right. That's true, because it's a moving average. So let's say 235 or
maybe
okay,
240.
Okay.
Right. So another $10. So
all right. So 8-10% move, more like 8%. Okay.
Yeah, 8% would be an extreme move right now.
Got it. 8% would be extreme. Got it. Okay. That's what I wanted to ask.
But going back, to the mean, this is the personality of the market over the last back to November. And I can go back 9 months. So right back here, this was the buy signal right there. So that's the personality of the market. It's basically just gone up along that blue line all the way up. Now, when will the market change? When will we get that advance warning? When this breaks below that and stays below. Got
it. Okay, that makes sense to me.
Yeah, it needs to get down to 245, somewhere in that area. I showed this before. This is the election year. This March low right here, which we might be heading into next week, it's still only 2.5%.
Right.
And even when we get near the election, it's only 3.3%. So, you were talking about a 4% move. This is March. This is from Stock Traders Almanac. This is basically a 4% move right here. From this peak.
-3. Yeah.
This is the 15th. Here's CPI right here on Tuesday. Here's options expiration on Friday. If it does get down there, that's 4% right there.
Yeah.
So 4%, 4% is a normal, healthy, should be expected market. Will we have a 20% drop? Someday we will.
Yeah.
Someday the Crash Bros will be right.
Yeah, but the beauty that you're bringing to us, and we talk every week now, and again, the audience is pushing you to have your own YouTube channel with maybe 3 videos a week, is we don't have to suffer the whole 20%. We can get out early.
That's right. We will get out early.
Right.
No question. Okay. And not only will you get out early, so all those people that talk about crashes, they love to talk about, the market's going to go to 2,000. Well, it's not going to go there in one day.
Yeah, no.
Could it go there? Sure. Anything could happen in the market.
Yeah, not in a day though.
Yeah. But it's not going to happen in a day, and it's not going to happen in a week. And you're going to have plenty of notice that it's coming. Yeah, you might take a small loss. You might take a 4, 5, 7% loss, but you're not going to take a 60% loss,
right?
Or a 40% loss. In fact, you will actually make money if you know how to do it. You can make money faster on the declines than you can on the rallies.
Yeah, I love it.
Don't be scared off by clickbait.
Well, Dan, do me a favor one more time, show your website, and thank you for taking on this challenge. I was really glad we got you this early so you could prepare. It was very educational. Thank you so much.
You bet. It's a topic I'm passionate about.
Yes.
I'm sure you're going to put as a headline on this one, will the market have a 60% crash?
Yeah, something like that. 60% crash coming probably will be the title.
But
Got to get people to watch it so they can get educated.
it's kind of sad. I mean, if I do my own YouTube channel, I'm not going to be putting that kind of clickbait out there.
Well, so let's talk about that. I did that. I did it your way for 5 years. And let me just say, it's very frustrating to put out good work, educational, that all you have to do is tweak the title a little bit and more people watch it and more people get educated.
Yeah, that's a shame. I probably will get
You will eventually get
I'll
discouraged.
get corrupted. I'll get corrupted just like the rest of them.
Well, again, here's the difference between what most people do, the Crash Bros, and what I do. The Crash Bros really produce porn and just go all doom on everything. I
Yeah.
use a statement I use in the session to make the most negative headline, but I try to produce education, like this video. It's
Yeah,
all education, but they have to watch it.
Interestingly, there was a comment when I said that last week, I think. One of the comments was, whenever I see a negative headline on the ORAT channel, I know that there's valuable information for me to learn.
There you go. Unfortunately, that is a game you play.
Right.
And if you really want to help people, it took me 5 years to give up, but I eventually had to give up.
All right. So maybe I'll just start with 100% crash coming.
No, not quite that bad, but you'll figure it out. You got to get people to watch. And if your goal is education, you want more people to watch.
That's my goal. That is my goal. That's all I want to do is education.
Yeah. So if you do all positive and joy, very few will watch, unfortunately.
In fact, I was thinking of one of those sessions will be, what's the market done, like we do. Actually, might just be copying this video. One of them will be educational, like I did last Monday. I'll take one topic around technical analysis and I'll expand it and teach people about it.
Yeah. And then that's what I think you need to do on your channel is you have to get a schedule going, like a weekend wrap up. Frankly, you can have this video if you wanted it.
Right.
Second, an education one. And then a third one that might be fun is like one deep dive on something like the Fed or CPI or some economic thing might be fun.
Right. Yeah, that's a good idea.
There you go. Well, I look forward to you having a channel, folks, or you having a channel. Check them out, breakpointtraining.net. Thank you so much.
Have a great weekend.
You too.